Hello, welcome to forex. This is my channel. I'm Francesco Sani. forex has been created quite a few years ago. It's my kind of own project to showcase my trading and also think about ideas that we might want to explore together, and also lots of kind of different things that people have talked about through the years on forums, etc., which I've been a part of. My trading started in 2012. I'm not a professional trader. I just trade for myself, but I started getting an interest in that. So and initially it was quite a strange experience, obviously trying to learn everything and pack in lots of ideas and systems and looking at different indicators, and it was kind of like the beginning was all about that, and it's very exciting, and the promise of money at the end of that obviously was what got me hooked, like everybody I suppose. This is my channel, forex. You can see that I've got a few subscribers, and the last video I made was March 2021, so we were still kind of in not lockdown per se, but we were still in the kind of COVID year, and the second COVID year, and that video is more than 500 views, so obviously the theme seemed to appeal, and I started thinking about that, what I could do is for my next video. So this is my 100th video, and I've been sort of agonizing as to what I could do for this video, but in the end I decided to just leave it and focus on trading, and then sort of do this video about my own trading, actually, since I talked about it the last time, which is quite some time ago. And so my last video had a disclaimer. I haven't got it for this video because I just want to get stuck straight into things, and again, it's not financial advice. I'd like to stress that it's just my own trading and ideas. This is kind of my account on my FX book, and you can see that there've been quite a few things going on there, and if you look, it's quite so I funded it quite a bit. Lost quite a bit of money, and that happened here on the cusp of sort of May, June, and then of last year, and then three smaller but still significant losses. I was doing really well the year before, 2020. I basically got given some funds from family, and I returned it. So it was £500, which is not a lot, I suppose, but I traded it well over a period of 2 months. It was the summer. June, July of 2020, so there's quite a lot of volatility on the euro, and I traded that Euro USD pretty much on the ride on the back of that volatility, and just doubled that precisely and stopped exactly at 100% profits, and returned all that money plus the profits to my family. So after that I decided that I should fund my own account the following year, so I saved up few months, and then this is kind of what happened. I started trading my own account in 2021, and essentially I was doing okay with the euro, and then it started kind of dropping from 122, so I was riding it up more or less, and then it started dropping, and I sort of kept holding through that, thinking it would sort of come back because the fundamentals and the technicals were telling me that. There didn't really seem to be an appetite for selling euro, and so my approach was that until the kind of volatility returned to proper trending up, I would just kind of hold through some of that descent. Eventually just collapsed, and I just sort of got margin called. I was kind of funding the account to keep myself sort of within margin, but even so it just kind of got to a point that it just kind of ate through my margin. And I was kind of monitoring it, but still it wasn't enough funds. So, this big drop is that. That was a really good point where I decided to switch completely. So I went into S&P 500, and that's what I've been trading since. So for the S&P, I started trading in October, and you can see that there's quite a bit of uptrending there. So I caught it just at the right time. I started trending that and riding it all the way up basically, and was doing pretty well until this point, kind of November. You can see that there's a drop there in my account in November, and then another one in December, and then in January. So what happened, 3 times I got beaten up a little bit. So that was essentially this point where it kind of broke through, and then went up again. December it sort of broke through again at this point, and then January it was just kind of dropped through everything pretty much. Like that was really unexpected for me. Now to my defense, I was quite new to trading S&P, so I was getting used to the volatility. I thought we were in a sort of buy and hold regime, and that it would just continue on the uptrend. I mean, historically that's been the case. We've been through a few drops. Obviously, I started trading it after that drop from here. You can see the first trade there. September, started buying up, and before that it was pretty much uptrending all the way. And so, you know, obviously we had the big drop in the pandemic, but that was quite a way back. So I felt quite secure in taking that approach of sort of buying the dip and also on hold through that. But unfortunately, I got margin called because my account was much smaller by then. But I did withdraw some funds in October because I'd done quite well September, October. So I withdrew some funds. So I got some satisfaction out of that, actually seeing some money back. Since the drop in January, which is kind of ate through my last cushion, if you like, I still have some funds, quite small, and decided to trade my way up. So as you can see from January, we're looking, what is it here? January, yeah. I've been basically trading quite a bit, and you can see lots of action there. And this is the daily, obviously, but I'm going to break it down to the 4-hourly. So what's been happening is not only have I completely stopped trading currencies, because I really feel that currencies have been what's been holding me back through all these years. I sort of dabbled in other things, but never really taken them seriously enough, and always thought that because currencies is what I started with, I was in the babypips.com website, which has its own kind of baby pips school. And I started on that, and I read books on currency trading, you know, Kathy Lien, and other books on currency trading, like Anna Cooling. And I just kind of thought that that was my calling, if you want to call it that. And that's because I invested so much time in currency analysis, and all the videos I've done as well, all been about currency. So my kind of frame of reference has always been currencies and using pips rather than points, and all these things kind of led me to think that if I only got better at that, I could sort of, and obviously the positive results in 2020 were really encouraging, and I thought maybe I'm doing something right. I can do short-term or shorter-term trading of, say, euro. The leverage is good, you know, I can use stops. It doesn't have to be perfect, but I can do that. But it is quite difficult to predict where currencies are going. Not that other markets are predictable, truly, but there's no actual trending that goes on beyond sometimes a few weeks, and then it's chop, 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 up and down. Sometimes the ranges are not so well defined, and if you're sort of trading longer term, it's also quite difficult to do. Anyway, I just found it that switching to something a bit more stable from a technical point of view, like the S&P, has been a fantastic step. I only wish I'd done this much sooner. So essentially it's taken me about, from 2012 I started looking into trading, September, and this is, you know, spring of 2022, so it's been almost 10 years, which feels like a very long time. But when I think about other professions, you know, it takes a long time. I mean, my main profession is music, so, you know, it's taken me obviously many more years to become not only a musician, but to find work as a musician and to become, you know, self-sustaining essentially as somebody in that field. So 10 years is not really a long time when you think about the greater time that it takes for other professions. You know, think of medical sciences, it takes many more years than that actually to get into the profession. So I think this is what I'll be doing for quite some time. So it could be that I'll do some analysis videos on S&P 500 if I have time, but I wanted to update you on that. So strategy, the strategy is not what I'm selling here. It's just I've come to it from, you know, trial and error and really thinking of something. And essentially I was looking for, you know, something that was more than just the moving average. I was looking at something that wasn't requiring constant updating, you know, with setting support and resistance levels and having to manually kind of update them and move them about, or clutter the page with old levels and new levels and lots of lines everywhere. I was looking for something as well that when you switch from one time frame to the next, it moves with it. Because obviously if you have something like a set level, like a horizontal level that you set, and then you move to a different time frame, if you've got lots of them and your time frames get bigger, So from 1 hour to 1 daily or a weekly. So obviously all those lines are going to compress quite a bit, and it becomes quite illegible, especially on a mobile phone, because I do a lot of that. I trade a lot on a mobile phone, or at least check the price and charts on the go. So it really is quite important to have something that's quite legible. So anyway, I came up with this strategy, and this is ridiculous. That I've used all these before. It's not like I've discovered anything new that I didn't know about these. And obviously I did my CMT at the back end of 2020, so CMT level 1, and I rediscovered all these sort of indicators, old and new, or kind of very old or not so old. And one of them was the CCI, the commodity channel index, and the CCI is what I've got here. So it's a combination of Bollinger Bands and the CCI that I'm using. Another thing that I use is the ATR, but I'll get into that in a second. So the Bollinger Bands are set to 21 periods, standard deviation is 2, and there's the EMA, and the CCI is also set to 21. So to 21 days, essentially 3 trading weeks. If you add 3 weekends, that's another 6 days, you get to about a month. So 21 days I find is a good. It's not too slow, it's not too fast, it's kind of the right amount. The CCI works on 100 over the medium line, which is the 0 or neutral line, and then 100 below. So plus minus, but I've actually changed it to 200 plus and minus recently. So again, even this kind of strategy has evolved. So the default has been changed to 21 as a period, and also to 200 plus and minus, because the swings we've been getting have been quite large, quite wide, and the 100 didn't seem to work very well for me in terms of kind of signals. So if you see that there've been quite a bit of peaks and troughs, the troughs have been obviously heavily leaning on the 200. So when we had that 100 here, we were going through it, and I didn't know how far below that I would need to go, or see action, price action go, before I could decide, where to enter or exit, etc. So the 200 visually is better because we've been on those levels for quite a few times now, and I figured that that was more of a significant level. As you can see, I know that sort of, looking back is quite easy with hindsight, but 200 there is subsequently a rebound, and the same here. Whereas if you look at 100, which is about here, which is where I'm pointing, you're kind of like in the middle of things, and you think you're going to bounce back, and actually breaks through, and there again it breaks through. And the 100 here is sort of respected. This is April this year, earlier this month, and then it gets through it again. So, but the 200 is more significant, and so the price does rebound around those levels. For the 200 positive, again, this kind of depends. So, I was reading when I was doing my CMT level 1 preparation that there was one professional who was quoted in the book as saying that she set her RSI, so like in an uptrend, the RSI would be skewed towards the uptrend. The oversold and overbought were not sort of equal, because uptrend tends to be overbought more. So she'd make it, instead of like 70, it would be like 90, because it was going to be over 70 quite a bit. So then you want to set it to a higher end on the uptrend. So I did the same here, and as you can see, obviously on the uptrending, there's a bit more pushing on that 200, and on the downtrending, it's a bit more pushing on the 200 minus. So it's worth having that expanded view, because it gives you a view on the extremes. And then I started looking at how to trade the middle line. So obviously in this case, there's a combination of the middle line, interaction between that and price leaning on the middle moving average of the, sort of the middle level of the Bollinger Band. So there's a rebound both on the moving average and on the middle line of CCI. And then also when price is below the CCI middle line, as it comes through it, you can see that there's obviously a little bit of interaction with the midline of the Bollinger Band, and they had to wait for it to peak and come back down. So there's a bit of decision to be made there. So these interactions between middle line, the extreme bands plus and minus 200 are very important, as they are the interactions between the Bollinger Bands, so the extremes of the width, and the middle line. I don't trade band to band, like, you know, from one extreme to the next. I tend to trade, especially in a trending environment, I tend to trade on the basically on the reversion to the mean, so reversion to the middle line and back to the Bollinger Band and so on. So when there's a trend, that's good because it's a well-defined range. It's kind of mobile, but it's well-defined. One of the things I was looking at is the Keltner Channels, sorry, and they are similar, but they incorporate the ATR values into the chart. So it's like Bollinger Bands, but they ATR adjusted. The only problem with that is they're not available on the mobile app. So I'd have to go back to the desktop and set the trades from there, etc. And the way I've got around that is that I'm using Bollinger Bands on both the mobile and the desktop app, but I'm also incorporating ATR. Now, I don't have the ATR here on desktop because I'm using the free version of TradingView, and I have maxed out on the indicators available in the free version. But on the desktop, the ATR would be obviously the same as the mobile app. At the moment, ATR on the 4-hour time frame is about 39 or so in terms of values for the 4-hourly, and I set it to 21 periods as well. So what I do is I go into a trade and use the ATR to set the level, the profit level. The profit target will be 1 ATR or more, never less, and the stop will be 1 ATR as well. Obviously the size of the Bollinger Band will determine if it will be 1 ATR or 2. So if you see the Bollinger Band expanding, like here for example, the level might be 2 times the ATR, and sometimes when the bands are quite expanded, it could even be 3 ATR, but I never bank on that band to be fully covered by a day's trading, because I tend to trade within 1 day. So if you look at my stats here, you can see that the length of the duration of my trades varies quite a bit. That's the length there, but the cluster of them is about 70 up to 17 hours, and so it kind of stands to reason that I should concentrate on the shorter term trades, and I've been doing that. Actually, I now try to avoid holding them overnight because it's not always certain how it's going to pan out, and I do monitor my trades. I mean, I let them do their own thing. I don't micromanage, but so for that reason, I don't bank on things, taking price all the way to say an expanded Bollinger Band. I will, when price action is so wide, I will maybe set 2 ATR and monitor that, and the 2 ATR will not cover the whole distance. Sometimes it's less than that. So I looked at my stats again, and it was saying that in this month, my reward to risk ratio was about 1.29, I think it was. So I'm looking at somewhere between 1 ATR and 2 times ATR for my profit target, which is kind of realistic. In terms of size, I'm 0.2 of a lot. And yesterday I tried my first 0.3 because I've gone back over the 100 mark on my account. It's over £100 again. So I've come from 40 something, 47 I think it was, and I traded my way up to 100. It's not a lot, but now I can start looking at when it's safe to increase that size on the size of the positions. The stops are always 1 ATR or slightly less. And I started doing trading stops, and decided that trading stops are actually not very conducive to this kind of shorter term trading, because I get stopped out more than it was worth. So as you can see, I'm pretty much buying and selling between the kind of middle line and the Bollinger Band, and when price is kind of coming to the top, either waiting to sell or sell and then get stopped out. That happens obviously. If it crosses over, look into buying, etc. And it's been working quite well. My stats here are quite bad, obviously, because of the bad year I've had last year. It's the same account. I decided to stick with it. Obviously, I'd give you much nicer numbers if I just showed you, my stats recalculated for the last 3 months. So this was 2021. Again, it wasn't great, but it was okay. It's positive. Then this massive, as I said, sort of mayhem started. Really good in October, and not so good in November and December. Obviously, January was a disaster again. Now, so since February, I've been using this approach with the CCI, the 4-hour, using fixed stops, etc. It's been much, much better. The conditions have not been easy. Look at March has not been easy, just a very small profit, but certainly not a negative month. February was a great month. This month is just coming to an end today, and it's been pretty good. What I say is pretty good. I mean, it's a fairly positive month, and I'm very happy with it. It's been a difficult year last year, and just started fresh on the S&P in kind of September, and I've done well. These kind of bad months, again, put it down to learning. But I know what the mistakes are, and I'm using stops. I'm not holding on to trades. It's just so much better now. I mean, I know what I'm doing. That's a big difference. In the past, I've always kind of a bit scrambled in the dark, really. There were periods where I knew what I was doing, but when times got bad, I never really felt that I was in control of my losses or emotionally so stable. I'm really, really happy with the way this is going. And so going back to why the 4-hour time frame, well, that's because it's a good mix of short-term and intraday. So I do go to the 1 hour to check, obviously, on things. So the 1 hour will give me enough detail. Sometimes if we're on a cusp or something, and it breaks through on the 1 hour, then I'll go back to the 4 hour and see and confirm, basically. So I do have a look at the 1 hour. The other one that I check is the daily, obviously, because that's always a good eagle-eye view of how things are going. On my desktop, I don't have these, but on the mobile app, I've got the 100 and the 200-day moving averages, and we've been obviously below and above and between even the 2 moving averages recently. So it's been very handy to check the daily price action against those, because they're kind of obviously significant enough levels to have on the screen. The weekly as well, sometimes I do check the weekly, or I have in the past, to see where we're at. So obviously when we crossed here and came down to, in March, to the bottom of that range in the weekly is quite significant. So March was a difficult month for me, but we did eventually, go all the way back up, and so there was a bit of uptrending, and then the downtrending started, and that's been quite consistent with my stats. So if you look at April, for example, my stats have been pretty much very strong on the sell side. So most of my profits have been from selling short positions, and that's consistent with that. So what happens is that when you have a bearish environment, although you're kind of trading short term with the 4 hour, etc., you are still essentially trading in the direction of the trend. That's something that Anthony Crudele on the Futures Radio Show, if you've heard his kind of podcasts, Crudele was a former CME trader. He worked with people who are in the pits. In fact, there was an episode just a couple of days ago about that, about interviewing former pit traders at the CME and how they transitioned to electronic trading when that sort of was pit trading was kind of phased out. And he was talking about how he sort of adjusted, etc. But this idea that he's kind of put forward to trade in the direction of the trend on an intraday basis, I sort of resisted it, but looking at the stats, what I've done, it actually brought to life the fact that even though, you know, in a downtrending environment, even though you can trade up and down, you find that in retrospect, it looks quite perfect, like a perfect range. But when you're actually trading in the day, if you imagine this bit, what I'm pointing at, you start waiting for price to go up, and then you sort of get some confirmation, you know, and then trade up. This candle will close, and you think, okay, I'm just close my trade. It goes above and then comes back down, and it looks perfect. But on this occasion here, for example, and remember that the moving average at that point might be slightly skewed to the upside, and then it gets adjusted down. So what you see on the day is slightly different in the moment. There might be quite a gap, and you see this little, this candle has a wick going to the upside. So you're not touching to the top. You'll find that sometimes in a downtrend, your intraday movement to the upside is shorter than the movement to the downside. In other words, the reversion back to the mean is a shorter distance, and the move down is longer as it pushes that Bollinger Band and general price. You get lower lows, so it has to travel further. So if you measure these moves, the downs are longer or sharper moving down, so you get more out of your downs or out of your shorts than you get on your ups. Similarly, when you're going on an uptrend, you can see the moves down, they never quite touch down to the EMA, to the moving average within the Bollinger Band. They kind of stop short of that and then push higher, and stop short and push higher. And that means that on an uptrending environment, your intraday shorts have less room to basically get to target. So you might have to set really short targets. So it's still worth obviously trading down, because occasionally and eventually that sort of mini uptrend there comes to an end, and you get a nice strong short that takes out the previous day's low, and then, you know, push higher. So it's kind of like, it's trial and error really, shorting on an uptrend and going long on a downtrend. And I still do it, but obviously it's best sometimes to wait for price to go back to a good selling level on a downtrend and then sell, then trying to trade it both ways. It's kind of more time intensive. You might get stopped out more, etc., or have really short targets, which may be more hassle than it's worth. So that's kind of what my trading has been like so far. Thank you for listening. I'm sorry it's a very long video and not much in terms of imagery, but I kind of wanted to show you where I've been. And that's kind of what I've been doing the last year after, you know, my last video, and basically just concentrating on trading. I'm still on forums. I'm on nottthenoobs.com, Pick Me Happy, and that's the name I brought from Baby Pips with me, and I've you know, been active there. Not so much recently, but obviously I've been trying to stay within the community and talk to people, and it's always good to do that. And so I just wanted to say that my next video, I'm not sure when that will be, but I'll try to do a video sometime, maybe on the S&P, because kind of that's what I'm concentrating on at the moment, and probably for the foreseeable future, unless something really bad happens, not to the trading, but I mean to the S&P, you know, get shut down or something. Hopefully that won't happen any day. And that's kind of what I'll be looking at. If you like this kind of trading strategy and you want to ask me anything, put some in your comments, please. I think I kind of explained it fairly well, but if you've got any more questions, I'm sure there'll be some. So just to recap, it's commodity channel index combination with Bollinger Band, both at 21 period on a 4-hour time frame, using stop losses and ATR to set targets. And basically that's the strategy. So I hope you enjoyed this video. I hope to see you in my next video, and please like this channel or subscribe. I'll be happy to answer your comments. Take care. Bye.